Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, Kevin McCarthy is in a very dangerous situation here where Matt Gaetz, a Florida congressman, is basically pushing to oust Kevin McCarthy from his seat as the House of Representatives Speaker, and he usually, he represents, the Republican Party, but despite that, a Republican Congressman, Matt Gaetz, is looking to expel him from his seat as a result of disagreements over the issues around the US budget, which we've been dealing with a lot recently, as well as that, bonds have sold off tremendously, reaching highs of not seen since 16 years ago in terms of the yield of those bonds, and this is all as a result of the sell-off due to many different reasons, but largely being the Fed's hawkish position on raising rates. But there's lots to talk about as well, lots happening on the charts, which we'll come to near the end, as well as lots of data coming out today on the economic calendar. But let's get straight into it. So Matt Gaetz remove Kevin McCarthy as House Speaker. Now, the Florida Congressman, Republican Congressman Matt Gaetz, has moved to oust the Speaker of the House of Representatives, and this has set a stage for a dramatic vote within 48 hours to determine Kevin McCarthy's political fate. Now, he took the move to remove McCarthy late on Monday, just 2 days after the Speaker brokered a deal with Democrats to avert a costly government shutdown. Now, this is all coming off the back of the news that we did talk about in relation to the US budget being passed and the issues that it was having passing through the two chambers of government. Now, generally, it was the Republican, rebels in the House that were causing issues for McCarthy when trying to pass a budget. Now, because government is split between Republicans and Democrats, it's not just Democrat controlled. When Biden is trying to pass these government budgets, these hardline Republicans are basically trying to block anything unless there's very steep budget cuts in terms of spending. And when they're not seeing that, they're going to vote against it. So even when McCarthy did propose a bill which did have some large cuts on it to the US budget, Matt Gaetz and other congressmen on the hardline Republican side still did not back it, and they now more recently didn't back the Saturday proposal, which actually favoured more the Democrats, and gave more money than what was previously proposed to the governments, basically keeping the levels of funding for government agencies at the current level for the next 45 days until a long-term deal is agreed upon. Now, Gaetz told the House that he was introducing a resolution declaring the office of Speaker of the House to be vacant. And this is very significant considering it's basically what we're basically seeing here is, in some parts, a Republican rebellion, against their own leadership. And this, Kevin McCarthy, because of the way that US political parties are structured in the US, Kevin McCarthy could be argued to be the most senior or one of the most senior officials within the Republican Party, leading the Republicans within the US House of Representatives. And so getting rid of him, having this Republican civil war, if you would say, is very significant for next year's presidential election, as well as just for the Republican Party as a whole. So it'll be interesting to see how this plays out. And this is so significant, in fact, due to the fact that it's the third time ever in US history that a motion to vacate has been filed in an attempt to remove the Speaker. So this is really significant stuff not seen for a very long time, and it kind of shows you the large volatility and issues which are beginning to arise within the US political system around, possibly some would argue levels of, hardline extremism within certain parties, not backing down as a result of populist beliefs. And we've largely seen that as a result of, strong, Trump-aligned politicians, especially in the House of Representatives, as we're talking about here, and as well in the Democrats on the more socialist side of things. Now, he will now need, Kevin McCarthy will now need a majority of the House to vote in his favour if he is to stay in his post, with Kevin McCarthy responding on X, formerly known as Twitter, saying bring it on. So it does seem that Kevin McCarthy is in for this fight, is in for this, challenge, and it does seem that he's ready to take it on, full pelt. Now, McCarthy will now need a crucial number of Democrats to vote on his side in order to protect him from the Republican rebels. And this is a big issue because ultimately the reason why he needs the Democrats now is because the Democrats largely, or at least it's expected that the Democrats will vote, against McCarthy, because McCarthy does represent the Republicans. Therefore, if he can't get the majority from his own party, and he knows that all the Democrats are going to vote against him, then he's got no chance. And so what he's actually having to do is avoid trying to convince the hardline Republicans, which he basically doesn't have a chance of doing, and rather than that, going over to the Democrat side and seeing which people he could pull over. Because ultimately, Kevin McCarthy, in contrast to the hardline Republicans, has shown an ability to work with the Democrats, especially on the most recent budget bill, as we spoke about, that deal for the 45 days, keeping the government funded at the current levels. And so it does seem that he may be able to find some better allyship, over the road, and with the Democrats. So it'd be interesting to see whether he's able to do that. But that said, the Democrat leadership, has not said yet how it will instruct its members to vote, with Gates having been a thorn in McCarthy's side since January, when he refused to back the Californian Congressman McCarthy, in his attempt for the Speaker position. So it does seem that Gates, this isn't his first rodeo in terms of trying to oppose McCarthy, which I'm sure he considers too much of a moderate. Now, more recently, Gates voted against the government funding proposal put forward by McCarthy that included steep budget cuts, as well as many other Republicans on Saturday, which didn't vote with that proposal, when McCarthy proposed a new proposal to keep the government funded, on Saturday. So, a lot of Republicans were like, wait, why have you now accommodated for the Democrats even more, when he proposed the Saturday deal following, the steep budget cut deal that was set on Friday. And so a lot of the Republicans said no, and they voted against it, but he had the backing of the Democrats, which the deal more tailored for, and therefore, he kind of lost the support of his party in the process of proposing this deal. And now Gates, as a result of insisting McCarthy deserves, retribution, for helping the Democrats and working with the Democrats, as Gates is a hardline Republican that doesn't really want to be working with them. But next to talk about really is the bond sell-off, which is obviously very significant. So this Tuesday, the 30-year US yield reached 4.91% for the first time since 2007, and this came as markets adjusted to the prospect of a long period of high interest rates and vast government borrowing needs. And this isn't the first time we've really spoken about this, with the US, raising rates for so long, as well as, the more hawkish rhetoric that's been coming out recently. This has pushed bond yields higher as a result of bonds selling off. And we even spoke about this yesterday when I basically explained how when you're raising rates, you're incentivized to basically take your money out of bonds, which traditionally have a higher yield and payoff than holding your money in the bank, but are still more risky than holding your money in the bank. And therefore, when they're getting a higher interest rate, through just normal bank accounts and savings accounts, they generally will move their money out of bonds into the bank accounts to earn that high interest rate, rather having them in, volatile, bonds, which can fluctuate in relation to their yield and price, obviously. So people generally tend to do that, and therefore, as the bond prices drop because people are selling them off to put their money in the banks, that also causes yields to go up because these work on inverse to one another. Now, in a sign of the worldwide impact, Germany and Italy's borrowing costs also hit their highest levels for more than a decade. So this is a really worldwide bond market international phenomenon, with many markets selling off as a result of this kind of global raising interest rates, situation, and therefore we've seen that across the world, with stock markets in the EU as well as the US falling, with the bond sell-off having followed a run of robust economic data and the Fed's hawkish signalling. And this is what we spoke about a lot, especially yesterday, was going back to the Fed's hawkish signalling around possibly raising rates later this year, but as well as that, the manufacturing data which did come out yesterday for the US, which was more positive. When we expected a higher contraction of US manufacturing, in fact it was pretty close to parity, just normal levels of manufacturing, and therefore showing the US economy is doing better. This means that the Fed's able to raise rates further. Therefore, people are expecting higher rates for the dollar. So people are taking the money out of bonds, basically. And as I said, with manufacturing activity figures this week also coming out better than expected, and US job openings rising unexpectedly in August, according to data yesterday. And this is the data that I just spoke about. As well as that, the 10-year yield also rose 0.09 percentage points to 4.77%, and the 2-year edged higher as well. Now, the shifting US bonds also triggered a fall in stocks and bond prices across the globe, and this is kind of unsurprising to us, because often, certain data, or at least, when bonds sell off, obviously they're a lot cheaper for people to put their money in, and so as US stocks are kind of in a bad situation at the moment, people, if they're able to get a higher yield on those bonds, people may take their money out of equities and put them in bonds whilst they can earn a greater, return on investment. And this shift in US bonds, as I said, caused that fall. And the UK 30-year gilt yield passed 5% this week, therefore passing highs of UK gilt yields following Liz Truss' ill-fated mini budget. And this is going back to last year, when Liz Truss essentially, with her economic chancellor Kwasi Kwarteng, I've probably pronounced that wrong, but essentially they proposed a kind of budget, mini budget, whereby borrowing was to be increased in favour of a kind of supply side growth policy kind of agenda, but as a result of that, the increased borrowing did mean that most people sold off their bonds, therefore driving up yields as they work on an inverse relationship, with the Nasdaq being also down more than 2% in the afternoon, with S&P 500 falling 1.6%. So a lot of these US equities are doing poor. A lot of these bond markets are doing poor as well. And this decline in the US stock market is the result of declines in debt markets, raising the returns that investors can lock in by buying bonds rather than stocks. And this is what I was just talking about. It's all about being most risk averse, and if you're able to earn a better amount of return through bonds without being in a risky position like you are with stocks often, and then people are just going to move their money out of stocks and put them in bonds, and this is why we're seeing that sell-off. This is not only the result of hawkish signaling by the Fed, but also by the fact that the US Treasury is also planned to issue $1 trillion in debt during the next 3 months to the end of September. So a lot of stuff is going on in relation to US interest rates, in relation to in relation to US bond markets. So it'll be interesting to see how this all plays out. But that's all for the articles. Next to talk about really is the charts, with US indices falling lower, and this is all in reference to what we just talked about, basically, with bond yields going up as a result of bond sell-offs due to Fed's hawkish signalling, and therefore we saw that sell-off in US equities, and that's what's being represented with the Dow Jones here, where we've sold off after reaching that 38.2% Fibonacci area. We kind of touched that, and now we're making new lows. So it'll be interesting to see how far down really US equities can go, following this change in economic outlook with the Fed's hawkish signaling, as well as robust economic data, and now bond prices falling. And we're also seeing that across the US 100, which also came off this 50% Fibonacci area, and as well as that on the S&P 500 as we spoke about. But next to talk about really is dollar, which is continuing to make new highs. So following all this data, and especially in relation to the Fed's hawkish signaling, we are just continuing to see this rally on the dollar, which never seems to stop. So it'll be interesting to see where the dollar can really go from here. It has broken above, these highs now, after touching the 50% Fibonacci area. So it'll be interesting to see whether it can now reach this area of extension. But yeah, that's the real thing to look out for, I think, on the dollar at the moment as we continue this rally. And that's the same represented on Euro USD. Obviously, it's a pair of the dollar, and that's now broken below these prior lows, continuing the decline to the downside after reaching the 50% and 38.2% area on the Fibonacci retracement tool. So it'll be interesting to also see whether that can reach the minus 27.2% area. And this is all as well off the back of European data coming out last week in relation to inflation. And today, the euro is in a very interesting position because we will have the ECB's president, Lagarde, speaking on, rates and, all things economic, basically. So obviously her rhetoric is going to play greatly into how the euro moves today. So keep your eyes open for that. But as well as that, we've seen a lot of yen volatility, with this spike today coming as a result of the yen gaining strength for the first time in a while, as a result of the Bank of Japan and the government of Japan talking about possibly intervening within the yen market and possibly helping it out, and making sure that the yen doesn't become too weak. And this has happened before in Japan, and therefore when people heard about this, the yen spiked, and this is what we saw here with the pound yen falling dramatically to the downside. So it's just crazy to see sometimes how dramatic certain currencies can move, just depending on certain information which isn't expected coming out, because this wasn't an expected bit of news, but the result of it obviously has been very significant, and bouncing off that 78.6% area after it tested this channel does start to give you the signals that possibly we're definitely on the move to the downside here. And it will just be interesting now to see how far down it can really go. But that's all for pound yen. Next to talk about is Bitcoin. And we did talk about yesterday how Bitcoin had seemingly, or maybe the day before, had seemingly broken above this prior area of liquidity as seen here, and which was tested there and almost tested here, and it had broken above it. So we were kind of interested to see how far above it could maintain, because obviously Bitcoin's had these issues of where it will break above as a result of some news, and then fail to gain any traction or any gain actual rally, and as a result will kind of just fall back to the downside, and is now nearing possibly coming back into this other area of accumulation. So it'll be interesting to see whether it will now sit around this area, or possibly bounce off this trend line and continue a rally to the upside. We don't really know for Bitcoin. It's in a very interesting position. As well as that, and finally, gold has reached this area of liquidity that I marked out near the start of the week. It has seen that Bitcoin's fallen off a cliff, and although it was kind of ranging and making some moves around this area as a result of the most recent information about the dollar, about the Fed, about the US economic situation, the gold's really taken a turn for the worst, falling from the 1940s mark, around here, not too long ago, just on the 20th of September, and now, as we enter October, is now reaching the 1816 mark. So really poor news for gold, really. But now it's reached this area of liquidity, where we've had prior lows, and obviously there'll be lots of orders around this area, and it's kind of tapped into it and moved out. So it'll be interesting to see whether this area of liquidity will be used as support for gold as it encounters these, this large sell-off which it's been experiencing for some while now. But that's all for the charts, really. Lastly, and most importantly to talk about, of course, is the economic data coming up today, with firstly European services data coming out, and this is all the services data. So we've got Spanish data coming out in relation to services, as well as France, as well as Germany, and as well as the euro, of course, the eurozone, of course, which is kind of the conglomeration of all of this. So it'll be interesting to see how that shapes up and how that might affect the euro and European stock markets. As well as that, we've obviously got the Italian growth rate, but that's not too that hasn't got the impact of some of these data releases, with European retail sales also coming out today, as well as the ECB president. As I said earlier, the ECB president Lagarde speech taking place today, so that will obviously be greatly influential into the perspectives on the economy and of the euro's position in relation to interest rates and the foreign exchange rate, of course, as a result of that. Now, as I said, the retail sales is also coming out today, so that will be very significant. And we've also got US mortgage data coming out today, so anything in relation to the US housing market will be greatly affected. And also we have US services data coming out, so keep your eye on that, as well as two Fed officials having their speech today, and that being Fed Schmidt and Fed Bowman. So some very important speeches taking place today in relation to the Fed's position on the market. And finally, we've got Polish interest rate decisions. So keep that in mind for when you're looking at European markets and European trade. But that's all for the economic calendar. That we went over some really important articles today, and lots is happening on the charts, lots of data as well. So keep your eyes open for all of that. I hope you have a great trading day this Wednesday. But yeah, that's all from us at Wildwood Capital. See you later. Bye.